Welcome to the December 8th edition of FedWatch. We're nearing the end of 2023, and we're hoping nothing much happens come December 12 and 13, the next time the FOMC is meeting. And it's been a relatively quiet week data-wise. And I think the pundits are filling in the void of their own. There seems to be increased talk about Fed holding interest rates in the second half. Wall Street seems to be leaning more toward an increased probability of decline in the first quarter of 2024. We're still going with the second quarter of 2024, but we'd love to be favorably surprised. And, you know, depends on the data that the Fed is looking at. New orders data came out this past week, and manufacturing new orders got even weaker, running 1.4% below this time last year, and that's in nominal dollars. So that's in inflation-adjusted dollars. Not in inflation-adjusted dollars, excuse me. Non-defense capital goods new orders, excluding aircraft, came in just 0.8% higher than October last year. And that is also in nominal dollars. If you adjust for inflation, new orders are now running about 2.4% below year-ago levels. So we're definitely seeing that part of our economy cool off. And as I mentioned last week, we're definitely seeing the labor sector cooling off. I'm not in that camp. We aren't in that camp that says they're not going to be lowering interest rates in 2024. We think they will. And adding to that thought process is our own ITR leading indicator, which had been going up and had been giving us some pause in terms of, well, if the economy is actually going to be strengthening, there goes the impetus for lowering interest rates. But that's curved back down again. And our ITR financial leading indicator, both proprietary to ITR, is weakening even more than the general leading indicator. So we're seeing this bounce giving way to renewed decline, and that fits the scenario for what to expect for 2024. So with the economy weakening, we're still looking at decline for next year. I ran the numbers, and anything between 75 and 150 basis point decline in the Fed funds rate in 2024 is perfectly normal. It wouldn't take any heroics on their part to give us that much in the way of relief. Historically, they all do their moves before we go to the polls, so I'd expect it to be done before November of next year. They don't like to be seen as swaying. They won't do it in October or November. Likely, they'll wait until December if they're going to do a fourth quarter move. So that's where we're at. Figure out how you can benefit from lower interest rates, if you will benefit from lower interest rates. It has lots of ramifications for your private wealth and your business lives. We think that's where we're heading for 2024. Thanks for joining me for this edition of FedWatch.